One of the most common misconceptions people have of the tax code is that the tax rate of their tax bracket determines the percentage of their total income that they'll have to pay to the government. Some people on the border between two tax brackets even worry that a small raise at their job will push them into a higher tax bracket and force them to pay a substantially higher amount in income taxes. In this video, I'll explain how tax brackets and tax rates work and why it always makes sense to earn a higher income. So here we have a very simple income tax code. Individuals making $0 to $10,000 have a 0% tax rate. People making over $10,000 up to those making $100,000 have a 25% rate. And anyone making over $100,000 per year has a 50% rate. We also have three example taxpayers. Person A makes $10,000 per year, person B makes $10,001, and person C makes $150,000. Okay, so let's see if we can determine each of their tax bills. Person A makes $10,000, and we know that people making between 0 and $10,000 have a 0% rate. So we can say that person A pays $0 in taxes. We also know that their effective rate is 0% because it's the only rate that applies to person A. So how about person B? Well, we can see from our tax code that person B is in the 25% tax bracket. So what's person B's tax bill? You may be tempted to say $2,500.25 because that's 25% of $10,001. But that's wrong, and let's think about why that should be wrong for any income tax code. The goal of an income tax is to raise revenue for the government that imposes it. So if an income tax code made it possible for someone to have a higher after-tax income by earning less, any rational person would make sure they earned less and received the higher after-tax income. For example, person B would make sure to earn $10,000 instead of $10,001, saving $2,500.25 in the process. The government would miss the opportunity to collect taxes on the $1 over $10,000 that person B would have earned if the tax code didn't create an incentive not to earn that extra dollar. This is why in a rationally structured income tax code, a person will pay the appropriate tax rate for the portions of their income that fall within each tax bracket. There are three terms we use to describe the difference between the rate of a person's tax bracket and the percentage of their total income that they actually pay in taxes. These are statutory, marginal, and effective. Statutory tax rates include all of the different tax rates imposed by the tax code. In our simple tax code here, the statutory tax rates are 0%, 25%, and 50%. The marginal tax rate is the tax rate of your tax bracket. Your marginal tax rate is important because it tells you what percentage of the next dollar you earn will be paid in taxes. The effective tax rate tells you what percentage of your total income will be paid in taxes. So what is person B's actual tax bill? Well, on the first $10,000, person B pays 0%, and on the next $1, person B pays 25%. So we have $10,000 times 0 plus $1 times 0.25 equals 25 cents. Then to calculate person B's effective tax rate, we take 25 cents into 10,001, multiply it by 100, and we get 0.0025%. We see here that person B's effective tax rate is negligible, while the marginal tax rate, the amount paid on the next dollar earned, is substantial at 25%. Okay, now let's calculate person C's tax bill. The first $10,000 is taxed at 0%, the next $90,000 is taxed at 25%, and the last $50,000 is taxed at 50%. So person C's tax bill comes out to $47,500. Then to calculate person C's effective rate, we take 47,500 into 150,000, multiply by 100, and get 31.7%. Here the effective tax rate is substantial, but still significantly lower than the marginal rate. So as you can see, there is never a situation where earning a higher pre-tax income will cost you money. If you can put in the same level of effort and earn more money, do it. Where the marginal tax rate really matters is in the case where you could earn a higher income if you put in, let's say, another 10 hours per week of work. At that point, you have to look at your marginal tax rate and decide if it's worth it to you to do the extra work. If your marginal rate is 25%, you may decide it's worth it to you. If it's 50%, you may rationally decide that having 10 extra hours of free time is more valuable to you than the extra after-tax income you would have earned from 10 hours more per week of work. So that's tax brackets and tax rates. Thanks for watching.